The most awaited IPO of 2021. Yes, the Zomato IPO. So today we'll be talking about the Zomato IPO and we'll be breaking down all the fundamentals that you need to know if at all you are planning to apply for the Zomato IPO. So this is Kenz with IPO reviews and let's learn more about Zomato now. Zomato is an Indian multinational company which is a restaurant aggregator and a food delivery company. It was previously called as Foodie Bay and it was founded at 2008. So the founders were Pankaj Chadha and Deepinder Goyal. And when we see to the competitors of Zomato in India, it is Swiggy and Amazon Food. Now let us see to the revenue sources of the company. Basically, the revenue sources is divided into four parts, which is food delivery, dining out, Hyperpure and Zomato Pro. Okay, so let us break down that. The first one is food delivery. The revenue depends upon the monthly transaction, the number of monthly transactions, the order frequency, the average order value, the restaurant commissions, etc. At the same time, dining out, the revenue depends upon the number of restaurant advertisements. And Hyperpure, which is a B2B initiative from Zomato, which provide with fresh, hygienic and high quality ingredients for the restaurants. Okay, so the revenue depends upon the order that they get from the restaurants and also the frequency of the order they get. And when it comes to Zomato Pro, it depends upon the membership and the number of users that is using the Zomato Pro membership. So now let us see to the IPO numbers of Zomato IPO. Zomato IPO is a 1.1 billion IPO. That is, the company will be offering shares worth 8,250 crores, out of which 750 crores will be sold off by one of its early investors, which is InfoEdge, and another 7,500 crore will be the new issue. Now we have to know how Zomato is planning to spend the amount which is being collected by IPO. When it comes to an IPO, it is an important factor to be known that how the company will be utilizing the amount which they collect from the IPO. So here we'll be seeing how planning to use the amount which is being collected from the IPO. So they have divided it into three purposes. The first one is funding inorganic growths. That is, they'll be using 40% of the collected money, which includes customer and user acquisitions, technology improvements and another delivery infrastructure improvements as well. And another 25% of the overall amount they collect, they use it for general corporate purposes. With the remaining percentage of the amount they have collected with IPO, they are planning for inorganic growth through acquisitions and other strategic initiatives. And now we have to look at the pre-IPO shareholders and their stake percentages. So the pre-IPO stakeholders and their stake percentages in company. The first and the biggest stakeholder would be InfoEdge, which is having 18.7%. And the second one would be Anfin with 8.3%. And the third one is with the founder of Zomato, which is Deepinder Goyal, is having 5.6%. And the rest of the stakeholders and their percentages, I'll be sharing it as an image right here. So now let us have a see to the future of food delivery business in India. So basically, the Indian food service market is divided into three, that is dine-in, takeaway and food delivery, out of which food delivery business is expecting to see its new highs because the market size is expected to increase to 11 billion by FY26 from 3.5 billion from FY20. The growing population, the increasing smartphone penetration, expansion to new markets, the higher order frequency from the existing customers will aid the growth. Now let us see to the financials of Zomato. By looking at the financials, Zomato clocked 1,367 crores of revenue in the first three quarters of FY21, but posted a loss of 684 crore This is because of the operational expenses, employees, ad spends, etc. Zomato achieved the positive unit economics in Q3 of FY21. Due to the high pandemic, a lot of working individuals returned to their homes and eventually they started to order online, right? So the frequency of getting online orders started to increase. So this has eventually led an increasing number of orders from the families to the Zomato, and decreasing in the ad spend as well has helped Zomato to be in a profitable note. That is, they have increased their unit economics from minus 30.5 loss from FY20 to 22.9 rupees of profit in 9th month of FY21. So that is a very quick review on the Zomato IPO. So are you planning to apply for the Zomato IPO? Please let me know on the comment section. So more videos like this, including the IPO reviews, will be seen on my channel. So please stay tuned and subscribe. Thank you.